Let me see on the stream how many viewers are, because I don't see any further comments. So I apologize for that. It's not because of me. It's because of what we see there. Hey guys, hello guys. Sorry for a small delay. I have some technical issues in regards of the stream, I apologize for that. We're gonna go and, as usual, look in general what has been going on in the overall economy in regards of the macro space. We will look some type of developments in the yields, and also we will look gold and silver, a little bit of situation in Europe, and then we'll switch for, of course, cryptos and look what's going on in the crypto space. So if you have any comments or chats, can you please type them in the comment box? And again, I apologize for the delay. I had some troubles in regards of the YouTube streaming. So let's start and let's look first. One of the things that I think all of the people which are tracking some of the macro scenes are looking. So this is the CMA tool, a Fed watch tool. It's basically how the market is pricing the next moves of Fed in regards of the rates. So as we can see on the 4th of May, we have, after a Powell comments a couple of days ago, we have a 50 basis points priced in at 70.5% of probability. So most likely Fed will step it up, be more hawkish in that regards, and the next 15th of June meeting, which is of course is going to be live, and I think all of the meetings until the end of the year will be live. It's pricing in 68.2% for the 25 basis points move. Okay, so that's is most likely in line with what have Fed transmitted or Jerome Powell transmitted last time in regards of the future hawkish move on Fed up to 2024 in trying to catch up the inflation. I will show you something which is very interesting and which we had yesterday on the stream. Everybody's talking about the yield curve inversion. So if you are not familiar with that expression, usually this inverts the yield curve, which means that the shorter end of the yield curve becomes and priced higher than the longer end. And if you go on a stock chart, you have a nice yield curve tool overlaid with the S&P. So as you move this cursor here, you will see actually how the yield curve actually behaves. And what is usually called an inversion is something like this, when you see the shorter end priced higher than the longer end, and that is usually portrayed as a 3 to 6 months recessionary outlook. So far as the market is tracking the yield curve in this respect, this was correct. It has predicted very nicely last a couple of recessions. So as you go with this was 2000, you can see how this yield curve actually behaves. We had also lows here when the yield curve came from the flattening form into a steeper one. So as you can see, the lower end in 2008, the Fed went zero with the rates, and then it introduced a QE, and actually the yield curve started to look more in line with the upward movement in the stocks and economy. And as you can see, as we progress, we came to the current moment. We had a little bit of move down in the S&P, but the yield curve, it's still not inverted. It started to flatten, definitely from some years, but still the shorter end is still trading here, so it will need time. So Fed will have to raise literally a couple of times for 1.7 or 1.5 basis points on the upside to invert this completely. And the good explanation in that we had yesterday from our founder, Todd Gordon. If you want to look that, I think that's very educational from that respect. So yesterday we had a YouTube stream for our mostly stock service, and Todd was a guest, and he explained actually his opinion and outlook on this yield curve inversion and how much Fed actually has to follow the rate hikes on the upside to invert the curve totally, which then will act as a possible predicting a recession coming in a couple of months. So very nice watch. I looked at it yesterday. I was not on the stream. I had a little bit of neck problem, so I had to go and fix that. Probably because I see too much, I guess. So I recommend you to go on our YouTube channel and find this video from yesterday and actually educate yourself how this yield curve is functioning. So let me look some of the larger picture in rates. Let me just go on the 10-year yields, and you which is following me in that regards, I'm still having some I would say nice resistance levels. I'm not so bullish, although I should be on rates, but you know, I'm usually looking at K technical levels to break. Fundamentally, I think when you see this situation, you should be bullish on yields. Okay, so in that respect, I will still present you my possible. I would say a midterm, relatively small pullback, which I'm looking. I'm I'm losing faith it's going to happen. So let me just find the 10-year US 10-year yields to show you my chart. Okay, wait just a second. No, this is the United Kingdom. Okay, just give me a minute to find this one. Why does it give me this one? Okay, so it's here. So I will glare the chart so you can see it. As you can see, we bumped, we went through my first resistance levels around 1.95. We had a nice pullback. I was thinking that was a beginning, but the inflation really skyrocketed higher, even fueled with the further geopolitical events between Russia and Ukraine. And I don't think this is backed by fundamental outlook currently, that we will have some pullback here back to 1.2. I think that's not realistic, but I will just wait a little bit more. If I see a break of this 2.3 further higher, we will have to turn this into a more bullish wave structure, and most likely it will happen. Okay, so take this wave count with a grain of salt. I need to see a 5-way move lower below this low to start to even think that this X wave will happen, which we don't have any signs for now. Okay, so I think let's stick with another week with this count. Let's give it a little bit more time, but in general, the fundamental outlook looks higher on rates, as you can see, and most likely we will continue towards this next resistance levels, which is around 3.3. Which will actually further and make this a little bit more bullish. Why? Because then instead of an ABC testing this zone, we will have to transfer this into 1, 2, up in 3, pullback in 4, and up in 5, which will be just an A wave, and then a move down in B wave, and up in C wave, which will be rates going much higher than in the next couple of years, then actually this very modest WXY, which will actually top the rates in beginning of 2024 at 3.3, 3.5% on the upside. So this will be actually the modest interpretation. The bullish one will be definitely if this starts to creep higher, testing these levels, then we will have to count this as a 1-2 up in 3, 4, and 5, then a B wave, and then further move on the upside. So let's give it a little bit more time for a possible retracement. Maybe something can happen in the comments in the next couple of days, or inflation will definitely not go lower because you are seeing oil trading again above 100. Food prices is going up, and what we have witnessed this last couple of weeks will be actually in the calculation in the weeks to come. So I do expect these inflationary readings to be much higher, I mean relatively much higher than before, which will actually still give a leeway to market to push it higher. Okay, so let's just give it a week more, and then for the next stream I will change it. On the European front, 10-year Bund, which is equivalent, so this is not a yield chart, this is a price chart. It's moving lower, so price is falling, yields are moving up due to the current environment. As well in this chart, which was behaving a little bit more in the technical line of this being a wave 4. So I will still keep this one. I don't think that ECB is in the same situation in regards of what it can do in regards that this Ukraine-Russia conflict is in Europe. We have a lot of, unfortunately, refugees. We have a massive inflationary, boost of prices in European Union. So optimistically, this will end soon, and if this ends, this wave count might hold. That ECB actually might look for a little bit more, I will say, a balanced view how they will manage this European economy in the next year or two, which will be hit by these current events pretty much hard, I will say. So in that respect, I will still keep this one, looking what the ECB is doing. My support level will be 157 on the price. And then I think a couple of things which we will hear about the monetary policy will definitely see if this chart works. So on the dollar index, I'm still following these two wave counts. Dollar has been still a classical risk-off or a safe haven currency still. We have heard yesterday or a couple of days, 2 days ago, that Russia will now price oil in rubles, so it will not be possible to buy oil from Russia and gas with euros and dollars anymore. Of course, the goal of that is to stabilize the Russian ruble, which is currently stabilizing. So on the dollar front, I will not go, and it will be unreasonable of me to just look technicals. In this current situation, we have to look on these two sides and then look for the clues which one actually will unfold. So let me unglare the dollar for you. This also can be a triangle. We still didn't test my ultimate level for the bearish wave count in dollar, and definitely in this situation I need to break some levels around 92, 91 in 5 waves to become bearish on the US dollar. In the current situation, either we're going to consolidate a little bit more, and if we get some more explosive events, hopefully I think not, but in the case we have to look both options. A dollar might continue higher, which is not going to be a good situation for the even world economy, because in the emerging markets, almost 60-70% of the loans are denominated in the US dollar. You also have the offshore dollar market. As we have seen last year during COVID crisis, Fed was extending the swap lines and actually providing liquidity so that this doesn't spill over on the US bond market, foreigners selling treasuries to obtain dollars in the crisis because they're in demand. So I think Fed has some instruments in their toolkit to prevent this going much higher in the case we get it. So I will give it a leeway a little bit in this type of situation and just watch. And when I have a clear, most probable view, of course, I will tell you that on the next streams. So let's look gold and silver. Gold and silver has been pretty kind of indecisive, in my opinion. We didn't get in this situation, as I said before, anything substantial in gold. We have managed to do a $200, which is rather pathetic if you look the situation, and we had some type of a nuclear threat or escalation of this. So for now, we are tracking two wave counts. One, of course, is bullish, but still presumes a pullback. So the main level for you, if you're interested in gold, you might look, if we get a pullback down to this 1,900, 1,850 levels. So this will be a three-way move with a further resolution. If you see a five-way move testing these levels below 1,800, I will say we will get a bigger pullback in gold and again down to 1,650 level before we continue higher. So same situation is in silver. We still don't see a five-way move. We are seeing a nice move today in silver, but this is still not enough. As you can see that we can relabel this as a five-way move. We only have for now a three-way move, so we need to be patient and to wait some type of a bigger development, and especially moving above these resistance levels, which will be a nice move from the silver on the upside. So I'm still watching this. One of the things I found interesting is this gold-silver ratio. So this is just the relation between the gold, strength of the gold or silver as they move. Definitely, as you can see from these highs in 2020 COVID crisis starting, gold was moving sideways while the silver was moving up, which was reflected, as you can see, in this ratio in five-way move down. But now I think we are in a pullback. So gold is appreciating a little bit more than silver in this ratio. And then I think this is a five waves up in A, down in B, up in C. So I think we're going to see a little bit more of that, whatever happens there. And then the silver will actually outpace gold on the, I think, on the upside in the next cycle. Not precisely a cycle, a shorter term cycle when this consolidation or a correction is done. Potentially this will continue further higher. So a very, I think, interesting chart to watch in this relation between gold and silver. So okay, guys, let's look cryptos. Let's go over a favorite chart, total crypto market cap. Still a very sideways price action on the total crypto market cap. I do think this is still a triangle. 23% is still holding, which is still kind of suggesting we are in some type of a triangulation. Any break of lower levels will suggest a little bit lower levels in this wave 4, but for now we don't need to change it. This consolidation still unfolds, as you can see, from March of 2021, where when we were actually one of the smaller in a smaller group of people which were claiming that actually this was just too bullish, and that looking by some fib ratios we're going to see most likely a triangle develop or a flat, which is still basically two options which we look with the distinctive support levels which we need to break in a case of a flat. We are still not there, so there is no need to change for other pattern and actually change it instead of this triangle. So first correction was actually a very simple one, ABC. Guideline of alternation suggests this will be a complex one, either either a triangle or something else. So for now, we have this as a triangle. So this is just a guideline. It's not the rule. But in this case, it works. As you can see, we are just trading sideways with no attempt of bears or bulls actually to surpass these two trading range levels on the downside or on the upside for now. So we think still we have time in this chart to actually continue in a sideways consolidation before we go higher. In regards of the news, I don't see anything so important. One of the things we should pay attention is this callings from the different regulation and also central banks bodies in regards of possibility of cryptos and Bitcoin to be a kind of evading vehicle for people of Russia to circumvent the sanctions. So that was mentioned by a couple of officials. I don't know if they're going to do something more drastic on that front. Obviously, they're monitoring that, so we will see what will happen. I think that was also some of the UK regulators says crypto adoption poses a financial risk and call for additional powers. So we will see if this will materialize as a little bit more burden for cryptos. For now, regulation in US in regards of this new group to investigate cryptos for a more safer environment and CBDCs, which was given by the Biden office, is definitely positive, but it will take some more time that we see what is the findings and of this investigation. It will definitely take, I think, all 2022 and maybe even more. We will see. BlackRock looks to offer crypto services. That's the old news. We already heard that a couple of months ago. That is also. We also have had news from Europe and voting. I think that more favorable for miners crypto legislation passed. I have to check on that, but in general, nothing so drastic so far in that regard. So we can go immediately to a Bitcoin chart and look what's going on there. So as you know, Bitcoin chart looks very similar as the chart of total crypto market cap. So we are still looking as a triangle wave count. Flat is a possibility, as I said. So we are still trading pretty much sideways for the last 2 months. As you can see, Bitcoin is not going anywhere. This can break on any sides. On the upside, daily 200 moving average is around 48,375. This looks like either a W triangle in X, which still has a little bit more downside possible before we go higher in D, or this is a part still of a wave C testing 2930K. So I still don't know that yet. I think there is not much of a people which can know with a little bit more probability what's going on here, because it's just a sideways price action. We have a very small shorts either for the E wave or for the larger drop. Very small trade we put with our members yesterday. It's still alive. We have stops above this high, where is the wave count triangle invalidation. It's going a little bit against us, but it's a very small position just to have something on, and we will see how that will go. So in this regards, I will stay again with the triangle 1618 time relation that we usually measure comes around end of April, beginning of May. In Ether is a little bit different situation, but still we observe this, especially on a weekly level. We observe this as a consolidation. In the case we break 30K, next level 25 to 20K, where is this 200 moving average, but we don't need to move currently in that scenario because there is no need. Sorry guys, there is no need for that currently. Okay, so on the Ether front, it's the same situation. If we look the whole wave structure, we are still trading sideways, most likely in a triangle wave count. As I said, same applies for Ether. we are looking this for a little bit more prolonged triangulation. Even if you anchor this wave, see here, you should see a more week spent in that. If this is an ABC for a D wave on the upside and then move down in E wave, this will take a couple of weeks time. 1618 time relation between secondary time spent in a secondary in a first correction or a secondary wave is now measured at June or July. Let me just see precisely where is the 1618. It's June 26 of 2022. These time ratios are usually just a secondary things we look, but what we can say for now, we are still in a sideways consolidation with no with not any particular clues, or I would say initiative for market to either go higher or go lower. So we are still going to wait for some time to see some signs. In regards of other cryptos, we have seen some of the nice moves on the upside. We looked with the members for Aave. Also, AXC has been moving nicely. We looked for a possible lower topping levels, a little bit lower. It might be that this was a little bit of a failure at 618 for a measurement. So I'm still going to keep this. If this develops in a 5-wave move, we will have to adjust and actually raise this 4th wave to actually finish somewhere around here. So a nice move on the upside, definitely. So it still needs to a little bit of a test of the upside levels. Usually when you see this type of moves, the before swing high will be tested and then reversed from. Okay, so I think it's very close to reversal, either down to these levels or just in 3 waves, which will kind of give a nice potential chance for the further move on the upside. We have also seen ADA moving from these levels, which we were looking for a potential lows almost exactly around this zone. So still we are waiting to see how the swing test swing highs will pass, which we are coming very slowly also and very closely on ADA. Other cryptos has been moving pretty much sideways. I didn't see any additional movement so drastic on that respect. So Matic is still, this is not enough for me to kind of still address that possibility to move lower is still finished. I'm bullish on Matic. I just don't think, or I will say more precisely, I don't have here enough of the information to actually call this as a low. Okay, so I need to see a clear pass of these previous swing highs in 5 waves, so to look to be on Matic for the further upside on correction. Binance Coin is also doing the same thing in a consolidation. So pretty much the same picture, moving back and forth. AXC today is a winner, definitely 15% on the upside. So 1 inch is also in 3-wave movement, still didn't confirm the reversal, but it's definitely trading around our levels for a possible reversal. This still can be some type of an expanding ending diagonal or something like that. So I'm still not labeling this as a low because I need to see a convincing price action on the upside to actually anchor this and proclaim this as a low of a 2nd wave or a B wave. So just a little bit of update. So let me see a couple of your cryptos. Let's switch to this trading view. So I do see, anybody wants to see X-bar or Hadera, I have it here. So I still think X-bar is in the 4th wave. Finished, maybe not yet. I need to see 5 waves up on a smaller time frame. So this still kind of holds even a smaller channel. So I will definitely look, I would like to see it a little bit lower technically to this previous fourth wave, but I think it looks pretty nice on the upside. Theta, Theta is still looking in a fourth wave, and I already mentioned to my members, I do think this is just a correction, still not enough to actually proclaim a low. 200 moving average is at this measured move equality levels around 3.2, sorry, 1.76. So I'm still don't have enough of material here to actually proclaim Theta and actually anchor this way forward here and say, okay, we are done, we're going to continue higher. So we are still in the zone where still we can go lower on Theta, testing these levels, which will be a perfect test, in my opinion, for this consolidation to complete, and then from there to continue higher. Aave was on our list already a couple of weeks before. We have looked Aave for a very nice support levels, which actually held very nicely, almost to the point, as you can see. So Aave is trying to actually stage a 5-wave reversal after a pullback. I think it will be a nice one. We do consider this to be a big consolidation, which is most likely completed. We are waiting for a confirmation, but a very nice reaction from these support levels. Actually, when we traded here, the update for Aave as a protocol came in and actually confirmed with this move on the upside how some technical levels and news flow can actually coincide and make the analysis valid. So let me look a couple of other things that you want. Hi Joe, hi Amit, David. We looked Theta and Gba and Hadera. Luca Zanzi, what's track? What's going on with this track? I think we didn't look at it a long time. Is this track? Yeah, it looks like a 5-way move is done. Yeah, possibly I would like to see track trading around 0.14. I don't know if that will happen. This definitely looks like a 5-way move down. Possibly this is just a correction, and if this continues lower, I will look for a support here. If this wants to go higher, it needs to pass this previous swing high, which is around 1.92. Miss Sector, hi, Amit, hi, Sushi, Serum, okay. Serum has been working nicely from our support zone. So let me look. Yeah, still not a 5-wave move. So we have been looking for Serum for some type of a move on the upside. So I would like to see more. We do see Serum going higher. From these levels, we do count this as a 5-wave move. This can be also flat and reversal, so I'm just going to wait a little bit. If this traded as a 1-2 up in 3, small consolidation, further 4 and 5, definitely a pullback will be interesting for me for the further development higher. So I think it looks good because we have seen a reaction from here and the zone we were looking for as a support zone. Okay, so I mean, usually sometimes it can be as it happens on Aave, completely there, like at the almost at the pips. Sometimes it's just a round zone, you know, just a kind of a fib level zone. Okay. So for now, Serum came into this our fib level zone and staged a nice reversal, but I'm usually cautious until it's completely confirmed, so that I can actually consider a pullback for a nice risk reward for the further upside. Link, I think we have tracked Link for a couple of years now in our service. I think Link is in a consolidation, in a fourth wave still. I don't know if that is still, if link, this is the Litecoin. Let me just find link. Yeah, link still in the 1, 2, up in 3, 4. This is fourth wave over, and we can anchor that. I still don't know. I need to see 5 waves up, which will actually increase probability. This wave 4 over is here, and then you have a 5 waves and a pullback, which will give you a small, relatively nice risk reward for the further move on the up. If you get a more downside, I don't think it will be a big one. I will look for 969 for the next support level on link. Schnitzel, hello Schnitzel, how are you Schnitzel? Hi Alex, could you find your show on YouTube? Oh, well, good to see you. Hope. Yeah, I'm fine, thanks. Can you mover? Let's look this mover. I don't know if I looked at. I think I didn't. Yeah, I don't know if this is the chart. I think I have it maybe before, some around here. Well, I mean, if this is that one, 1, 2, down in 3, 4, and 5, this doesn't look healthy. So it has some type of a divergence, so maybe it's gonna go a little bit lower and then reverse. So I don't know. This doesn't give any, still any reversal signature for now. So not much to look there. Do you celebrate Madeleine Albright death? Well, I mean, I'm not into that stuff, guys. I'm pretty apolitical. Of course, 1999 bombing was a very, I will say, awful thing. I was also in Belgrade during that time. So I will not go with judging. Definitely, whenever you see kids and even older people dying, it's a disastrous thing. So I'm not a war guy in anyhow. So so don't ask me to be judgmental about anybody. I just observe war as a in any case from any side as a human tragedy, and I do feel for every victim, and I'm still not get around how we are still cannot sort out this geopolitical instinctive nation relations and kind of live in some sort of peaceful cohabitation. So bombing was a dreadful thing. I was here, as I said, but definitely you have all reason to hate the other side with this type of things, but I tend to be more and understand this from the broader perspective and observe war in a humanity as an overall very tragic event. Okay, so yeah, Ada, I don't have visibility so clear. I do think if we get 5 waves up, we will see some type of a correction on the upside. So AVAX, I think AVAX. Yeah, still looking nice. Our support level still holds, but we need to see a 5 waves up, which we don't yet. So if this is some type of a 1, 2, 1, 2, this doesn't still not depict a full reversal. So I would like to see a more of AVAX on the upside to actually transform that in a third wave. So not much actually, but the nice thing is we are supporting this. We are holding this support at 86, 88 on that front. What is else interesting, guys? Yeah, so definitely, I was posting on my Twitter feed the question from where the money will come from to cause the next move in the cryptos. So it can be a mix of things, although if we look the span of a 10-year period and correlation between dollar and Bitcoin, it's not a stable correlation. I know there is some of the kind of a famous crypto guys are kind of presenting this correlation as a stable one. I looked from that of a couple of sides, and the correlation so far, if you measure 10-year period non-stop, it's 0.64, which is not enough to kind of put that into a relatively tradable inverse correlation. It is true that Bitcoin has been traded inversely with the dollar from COVID crisis 2020, but I will not call that stable because I think Bitcoin is a completely different thing. Although it is denominated in dollars, dollar is affecting different things, even Fed swap lines or interest rates, or that can be mixed. Bitcoin, and once you have a Bitcoin, I don't think it functions vice versa because I think the longer term holders are not willing so much as we can see to exchange their Bitcoins for dollars. So as you look from the inflow perspective, this correlation is varies, and it varies. It might be true on a shorter term basis because, of course, that's trading. But on a longer term basis, I will say that it doesn't function vice versa, especially as you can see the mindset of the people which has a large amount of cryptos or a Bitcoin and holding it over a longer period of time. So I don't think their perspective of having dollars for their Bitcoin is actually the same as flows, as the inside flows. So I will not, in my opinion, address that as a stable correlation. Also, if you look the correlation of Bitcoin, you can find it in a couple of assets classes, in the negative yield. Debt, actually, almost all of the money before was in a negative yield, so you will not get anything on a bank for your money, and the Bitcoin was growing in this deflationary environment. You can also use that chart as a kind of a reference. You can use the stock market or a tech, which is not also a stable one. I mean, it functions on a smaller time frame, but on a bigger time frame, it's not so 100% inverse correlation. So I will not agree. Looking all of the measurements, I see that these correlations are so stable and that you can rely on them, maybe on a short-term trading, but on a longer-term basis, I think the perception of Bitcoin holders are completely different. I think it's a completely different animal or asset class than the one we know. So therefore, I don't see that functioning in a. I mean, I understand flow functioning short term, even mid-term, but the longer term, I will not agree. So just be careful on that. Yeah, so we're going to continue track this for you guys. If you want to check us out, thank you for the attention. If you want to check us out, tradinganalysis.com, we have membership area designated for cryptos. I think we have still a little bit more of this consolidation to go, and then we will see from and what event and what will be the reason for the larger community, especially institutional community, because you have to understand from the retail perspective, if you have your paycheck and the inflation goes higher, you have to designate that paycheck for paying food more, for paying gas and energy more, and other stuff which is going up in price because energy is base of all of the pricing, as we know. So I don't think that we can expect that from retail side participating in that move on the upside because people will have less money available in the next couple of years. So if we want to see the bull run on the upside, we have to expect it from institutional side. So we have to think from the perspective, if the rates goes higher and they can actually put this in some type of a interest return from the banks, what will be actually the reason as maybe inflation protection, or maybe some really pricing something pricing in the dollar, so maybe dollar devaluates and Bitcoin goes up and forms a little bit more inverse correlation. So I'm not clear with that. I'm trying to figure it out. But I think we definitely have to look at it from the institutional side, and I'm always active thinking what will be the trigger. So I have a couple of ideas. I will go over that on the next stream, and we can discuss that. I think it's a very good discussion. So thank you guys. Sorry for the delay, and see you next week, guys, on the Crypto Lab with Alex. Hit the like button and subscribe, and help Alex to get more views. So see you guys. Bye bye. Up to next week. Take care.